Hey everyone, welcome to another episode of The View from the Arch. I'm here alongside Himanshu Sahay, and together we're the co-founders of Arch Lending, the premier spot to borrow against your Bitcoin and crypto assets. And today we have a very exciting conversation. We've got Andrew from Republic and Vlad from INX here. Thank you for joining us.
Happy to be here.
Happy to be here.
Maybe we'll kick it off first and let both of you introduce yourselves, as well as tell us a little bit more about Republic, INX, and I know you recently announced the acquisition of INX by Republic, and so would love to dive deeper into that as well.
Yeah, no, happy to. So my name is Andrew Durgee. I'm co-CEO of Republic. I've been in the blockchain space since early 2010. I was CEO and co-founder of a company called The Coin Tree. We were the first doing multi-sig security storage for Bitcoin 2011, 2012, and 2013. If you were around back then, you used us. We were the only game in town. After that, I was in the hedge fund space, running due diligence and fundamental analysis engineering teams for hedge funds, most of which is crypto specific. Became partner at a firm called TLDR Capital, which was the number one ICO advisory firm globally, 2016, 17, 18. So total wild west. That will never happen again. It was like insanity. But that experience really led me to believe that the space is going to move into a regulated framework. Although I thought it would move actually faster to that. But I joined Republic in early 2019 to really push the regulated agenda for the space. The goal was to build the first vertically integrated crypto investment bank, which we did relatively quickly. And then that expanded to a variety of the products and services, at the Republic side. So we're really nose to tail integration from capital formation to tokenization, storage, custody, secondary market liquidity now with INX. And we really have a turnkey solution as it relates to digital securities.
Yes. My name is Vlad Uchenik. I'm the CEO of INX Securities. We just got acquired by Republic in November 10th, 2025, working through an integration. I've been the CEO of this company through its various iterations since 2013. In November of 2018, we were the first secondary market trade of a digital security. We did that with blockchain capital and Spice VC at the time. Completely new, evolving, went through all of the pains of Gensler and the old regime. Enjoying the new regime right now, although not without challenges nonetheless. And very excited about having a major asset like Republic behind INX to take this to the next level. And that's what we're looking to do.
So, Andrew, off camera, we were just discussing that you guys love the regulatory arbitrage game. Could you talk about how the acquisition now is a step in that direction and what this enables for the two of you together?
Yeah, so at Republic's core, we have two primary DNA strands. We have legal engineering and technical engineering. So my co-CEO, securities attorney, that's the legal engineering side. I'm a more traditional developer engineer, so that's the technical engineering side. And when we look at how to grow and scale the business, we like licensure. A lot of Web3 businesses left the US, right? They went to Dubai, Bahamas, Singapore, whichever. We always stayed here in New York on Fifth Ave. We always believed to really win that the industry was going to have to come back to the US at some point. And I mean, honestly, I live here. My whole family lives here. If I'm not betting on the US, I don't really know what I'm doing. So we really made that commitment. And so, this is, I think, our seventh or so acquisition. And what was really attractive about us is actually INX has very similar core DNA. They're very regulatory oriented. They understand the importance of compliance and licensure. And most importantly, they were kind of the capstone last mile for us as far as the full life cycle of tokenization. So if you're looking at the actual process of tokenization or the capital formation or primary issuance / origination side, you're looking at distributions, you're looking at your wallets, infrastructure, transfer agents. The last piece of that puzzle, if you are going to be a large originator, which ultimately Republic was for a long time, the last piece of that puzzle is the secondary market. And INX had all the right pieces to help us really close that gap and have a true full circle delivery mechanism to the market. And it's one of the reasons why you start to see now RWA is a real thing in the space. In the past, if you wanted to interact with Tokenized Securities, you'd have to work with like 5-6 companies. You'd have to work with a tokenization company. You'd have to work with a primary issuance company. You'd have to work with a wallet company, a transfer agent, a custodian, a secondary market. These are all entirely different companies, different businesses. And you're talking about passing KYC, KYB over and over. It just was too heavy. It was too heavy a lift. So we consolidated all that into one environment. And again, INX was kind of the last capstone piece. And this is now allowing real velocity within the tokenized security market.
You're just collecting the infinity rings.
Yeah.
Well, with respect to DNA, when INX was going public in 2020 as doing its IPO, the theme of the prospectus was they wanted to create a regulated environment for security token trading, right? It didn't exist because, in 2016, 2017, it was the wild, wild west, which was not going to get, recreated. And ultimately, we're in New York. So they say, if you make it in New York, you can make it anywhere, right? Sort of like the US. Yes, there's stuff happening in Singapore and a lot of, Latvia and all of these, all these places. But for it to really be legitimate, it had to succeed in the US. And the Republic stuck it out. That was its belief. And now with the INX piece, that's the final piece of the puzzle. Now, all bets are off. Anything could be done. They have the whole ecosystem. And that's kind of how they approached it.
We've been spending a fair amount of time just thinking through RWAs, and you two, I think, are the perfect people to ask. So I'm going to pepper off a few different questions. One is, we naturally actually work together for our CLO, which we tokenized, and that's a funding facility that we use for our loans. And now I think that's an example of private credit that's sort of RWA here. I can think of a few other examples, like maybe stablecoins is like the one use case that's had a lot of adoption. Money market funds. I know you all do stocks, both private and public. Across the segment, sort of where do you think we are in the adoption curve? Because you guys see both sides of it, like the folks that are looking to put them on chain as well as maybe potential buyers. But also, what do you think sort of like the buyer demographics of these look like when we talk about some of these, like maybe public stocks on chain and things of that sort? Are these mostly international folks that don't have access to US markets? Like, could you maybe break down that dynamic as well?
Yeah, I mean, when you look at the tokenized public stocks, at least in their current iteration, are actually not that innovative, right? And like, no one scorched me for that, but that's really how we feel about it. I think future iterations actually will be really provocative, but the current iteration, you nailed it, is really about access to people who can't touch that. And that's mostly offshore, right? So when you're looking at tokenized public stocks, mostly offshore entities, they really are benefiting the most for that. The capital markets here in the US are robust. Like, you can go buy, these public companies relatively easily.
Yep.
And so, first and foremost, I would say that's one delineation. When we're talking about the innovation side, the two best use cases immediately right now for tokenized or for RWAs or tokenized securities, or maybe I shouldn't say tokenized securities, but RWA, stablecoin number one, without a doubt, clearly has hit it out of the park.
Yep.
Right. And even with wild adversity, still made it through and is still succeeding. The next piece, and this is where we've bet very large, is in the tokenized private shares. This is now the first time that people can even have access to some of these assets. There's been a lot of items that have kept, whether it's retail or even accredited individuals, out of having access to a lot of this asset class. And you have less and less companies going public. You have companies staying private for way longer. The average company 10 years ago stayed private for 4 years. Today, it's 14 years. Next year, it's 15 years. The year after, it's 16 years, right? Just a number of years ago, there were 8,000 listed companies on NASDAQ. I think today there's like 4,000. And there's almost like a mass extinction event happening on the public market side that is really not being talked about nearly as much. And all the value accruals happening in the private sector, right? If you look at, that's why private equity has been blown out. They've totally crushed it over the last decade because all the value accruals happening there. So through tokenization, you now have the ability to deliver these assets to people prior to the public markets. That is one of the biggest innovations that's really taking place live right now. And it's where we have a lot of our bets laid out.
How do you get around some of the legal hurdles in the transfer of private shares? Things like ROFRs. Is it all forward contracts? Are ROFRs involved? Are you working directly with the companies? And maybe a final question there. Are you facing pushback from companies, or are they actually happy about this?
Yeah, so it's a mix. A lot of it is education,
Yeah.
honestly, with the companies. More and more, we're seeing that the companies want to partner with us. Believe it or not, private companies also want like retail access, and retail want access to private companies. You're actually solving, a problem that both people want, or both groups want. So it's just honestly, it's a mix. But more and more, we're seeing the companies coming out. They want to be the issuers. They want to be involved. There are a number of issues around what's known as 12G, which is a shareholder threshold, or there's a 99 SPV rule, which is you can only have 99 shareholders in SPVs. Through tokenization, there are solutions now that help solve that, right? And so that's part of the kind of the innovation, secret sauce that we're driving at Republic, in order to provide access and inclusion in this asset class that really people have been held out of for a very long time.
Are companies using this as an employee retention tool or hiring tool as well, where now you can actually get liquidity and not wait for 10 years?
We launched, we did a tokenized fund for Hamilton Lane, which we're really proud of. It's a 40 Act fund. And there's part of the story that actually went really unnoticed in the media, which was actually kind of sad. But Hamilton Lane, only about 10% of Hamilton Lane's employees can invest in Hamilton Lane products, right? Okay. Which is nuts. Like, you work there, and 90%, 80% of your employees can't touch your own products. We launched this tokenized product with Hamilton Lane. We lowered the barrier from, I don't know, tens and tens and tens of thousands of dollars to I think 500 or something like that. And it's the first time that non-accredited could participate. So it's the first time that their own employees could invest in their own product. They were, so excited about that. They actually gave a stipend to their employees to be able to go and finally be able to buy their own products. And we actually found that rate, that like 10-15% rate, is actually really common among other asset managers. That around 10% of the firms are the only groups that are able to participate. So that you're going to start to see that transition through actually, other institutions.
And is that solely because of the minimum investment barrier that then gets lowered because of tokenization?
It's accreditation issues.
Okay.
Yeah, it's accreditation issues. So like, you need to have a certain amount of wealth, or you have to earn a certain amount a year, or as a household. Or you need to be what's known as a knowledgeable person, which means you're like, licensed with your Series 7 or whatever.
Yep.
So that gives you access to it. If you don't meet those barriers, which are, honestly, just a financial gating item, you can't touch those things. Like, you can. The example I always give that drives me nuts is like, you can be a single mom of 3, mortgage your whole house, go to Vegas, put it all on black. But if you own pre-IPO SpaceX, like, you're a criminal. Like, that makes no sense, right? And so we are really trying to attack that. And we just couldn't do it with INX. INX is such an important feature that we can finally kind of make that dream happen. So we're the most excited I've been in the space, obviously, since relative to the beginning, and it's the most excited I've been, hands down.
Yeah, it makes a lot of sense, right? Like, especially if you look at the backdrop, you have SpaceX, OpenAI, Anthropic. Like, these companies are hundreds of billions, if not trillions of dollars of value, and haven't seen the public markets yet, which is historically very different than when Amazon and their peer set went public, and the types of people that got to realize the benefit from it. Yeah. It's like such an important problem. The only people I can think of besides you all that's like maybe taking a stab at it at scale is Robinhood in Europe. What do you think is like pausing, like not making others focus as much in this space, or like what are the real hurdles that you all have had to overcome that or maybe that are still there that you're working through right now?
Honestly, it's hard.
Yeah.
Like, it's regulatorily difficult to do, requires extensive amount of licensure, and we are not a law firm, but like, we are basically a law firm. One of the difficult things just in financial innovation period is that when you're working with outside counsel's general job is to help de-risk things, right? So they are not agents of innovation. And so that can be very stifling when you're trying to innovate in the financial space. So you need to have a really robust legal team internally that try to help, push the limits, to try to find new creative solutions that is, regulatorily justifiable. And you need to be able to document that appropriately. And that's such a core component of who we are as a business. That's what has allowed us to really kind of make these large strides forward. And so we've been fortunate, and it's a huge hat off to my co-CEO, Ken. He's one of the most brilliant, truly legal securities minds, and he's helped drive a lot of that for us. Yeah.
The other piece of it, I guess, is, do you guys see yourselves as like stewards of what you're actually tokenizing in terms of the quality with that? Or for you guys, is it mostly just making sure that all companies that want to have the ability to do so, and the judging the quality of it is more so an investor question, and you all just make sure you flag all the information appropriately?
So we run it through broker dealer. So it has to pass diligence, it has to pass our investment committee. It's heavily regulated.
Yep.
There is probably a future where that becomes more commoditized to some degree. But it's really ends up coming when you're looking at a lot of these private opportunities, a lot of it comes down to what's available and disclosures and information. And this is going to be the battleground, by the way, in the future of how retail will be able to participate in these private companies is going to come down to disclosures. And what will that look like in the future? These aren't public companies, so they don't have public reporting requirements, but we also want to protect the consumer.
Yeah.
What is the right happy medium in there, right? And I think over the next 2, 3, 4 years, we're going to start to see a lot of a change within that dynamic to help solve that problem. How do we give access? Listen, if all the wealth is generated in an environment where only the super wealthy can participate, that's just going to make things worse, right? You're just going to see greater disparity, and we're really trying to avoid that.
Yeah, I mean that's the biggest divide, right? Like most private companies are very confidential about any of their information, and so now how do you get to a world where you allow all sorts of like retail to participate, but also understand what they're doing, because these companies naturally don't want to divulge all of their information or are very secretive about that.
Well, you have so the other, besides employees being shut out of participating in Hamilton Lane, the other big driver of these private equity markets, tokenization, and being able to stay private through tokenization and creating liquidity that settles in 2 minutes as opposed to 2 months, are the founders too, right? The founders, they're illiquid a lot of times. They have on paper a certain amount of stock that they own, but they have no ability to sell unless they do a private deal with somebody or go public, right? So this enables them another avenue through the secondary market to tokenize their equity, make it available for sale, and sell it to other people while still retaining control and staying private, right? So it takes the inefficiency that used to exist in the private market and blows it out the water, right? I think that's a huge advantage. And with respect to the challenges, even to this day, even with this new SEC, we're just a handful of ATSs, that has this license. Now, having the license and having an actual technology and being operational, that's a next level. We have that. We've been doing it since 2018, right? Republic saw that. That's why, they have a plug and play. And now we're just making it better as opposed to starting from scratch, getting the license, building out technology, and trying to figure out how it works in that ecosystem. We know exactly what we want to do. Now it's just a matter of executing, getting the public to buy in. And also with respect to the companies, right? We want quality companies, right? Just because it's tokenized doesn't make it a quality company, right? So we're always going to be looking for quality companies, whether it's tokenized or not. And that's another big distinction that you need to educate the public on, right? So that they know you're still owning a piece of the company, whether it's tokenized or not.
As this becomes more commoditized, there's more volume of companies, both public and private, in the tokenized markets on Republic and INX now. Do you see a world in which this creates a whole set of indices and other products around these companies? And then as that happens, do you imagine this being a platform specific thing, or does this become interoperable? And what does that interop layer look like across platforms?
I think there's a crawl, walk, run approach that everyone should kind of take a step back and look at. yes, there's going to be tons of businesses that I don't even foresee that are going to spin up around. I mean, because you're talking about new asset classes and new ways to interact with asset classes. I know we certainly are looking at other products and services that we can add that center around this. And I'd say borrow and lend is at like the highest point of that. Like you're going to see a lot of that coming out because you're going to look at an environment where there's now a scenario where people will be able to hold these positions and borrow against them, without taxable events or being, or having at least, favorable tax treatments. That is coming at rapid speed, right? And I'd say that's a big motivator for a lot of the larger participants. As far as the interoperability side, as it gets more commoditized, that's an inevitability, right? So you're going to start to see more interoperability just period across the board. What that looks like in in final stage, I'm not really sure yet. But I know Republic wants to be the infrastructure layer. That's ultimately how we're approaching it. So, we're Switzerland. We want to work with everybody. And I think there's a lot of opportunity and there's so much pie, like no one can eat all the pie. It's like really impossible. That's a really exciting environment to be in. One of my favorite things about our vertical in particular, and has been for a long time, is even though there's a lot of competition, it's really like co-opetition. Like even the people that we're competing with in certain areas, even though no one really does the full gamut like we do, but maybe pieces of it, we try to help them. We work together. It's of this rising tides approach, and we found that to be really successful for us, and we're going to continue to have that type of a model.
Yeah, it's one of the benefits of just having a massive TAM and being early on, right? Like you're not really competitive in the same sense in that there's so much room for everyone to grow that, it's more of just like everyone working together to increase education and really just grow the space. Yeah. One thing I want to go back on, and then we'll touch on the debt markets, because I think that's a piece we've been really interested in with respect to RWA. But if you go back on, okay, like let's say I'm running, like let's say you're the Collisons of Stripe. Like what is the pitch to them to like tokenize their equity? For them, it's like, hey, if I want a secondary, I can just do a tender like that. They've been doing it historically. So maybe liquidity for the company isn't the most pressing concern, but curious, like from your guys' perspectives, besides maybe broadening the access to retail and allowing everyone else to participate, are there any other things that we're missing there that they should keep in mind?
There's different kinds of liquidity. Now, the liquidity for early investors, founders, and employees is not easy to find. So if you have the ability to tokenize these shares that they can now borrow and lend against those positions, you're talking about unlocking an entire new borrow market, and you're solving, let's use SpaceX just as an example, right? You have engineers who've been in SpaceX a really long time that have these massive positions in SpaceX, but they're like living in their mom's basement because they couldn't exit any of these things, right? And if they have the ability to borrow against those positions prior to an IPO happening, right? And they don't want to necessarily sell their position either because they're committed. They've been there 10 years. They don't want, they want to keep riding the rocket as it might be. There's a massive market there that has yet to be unlocked, and tokenization is the key framework in order to do that.
Yeah, and I think that's like a really interesting point, because if you're the founder of like any of these companies that are of that valuation, you can go to the JP Morgans, the large banks, and they'll give you a loan against your shares, not only because they think it's collateral, but also as a way to win the banking business or the IPO business. But what tokenizing allows you to do is essentially offer that level of product, the ability to borrow against your like private company shares, and broadens the playing field there. And now there can be a market against it.
But a lot of those banks won't touch it, by the way. I mean, SpaceX is a different example, but if you look at,
there's a handful of SpaceXs. The majority are not that.
There's not that many, right? Like what the top, the average market cap of the top, top 100 private companies right now, I think it's like 35 billion. But if you take out the top 5, that number shrinks drastically, right? Yep. And then if you take out the top like 15 or 20, that number becomes like 5 billion or something, like 8 billion. I think it's 8 billion. And so, it's very weighted, at the top. So are those few companies at top probably do get serviced, but your 25 to 100 don't have that option, right? And they're still real businesses. I mean, $35 billion business is a real business, right? And so there's really where the big opportunity lies.
Yeah, and even for the big companies, it's only a small portion of people that even get service. You know, like if you're talking about maybe the SpaceX, it's only a handful of folks that maybe have access to those level of products.
It's very limited,
for
right?
sure.
And this opens it up for everyone.
And I think specifically for Borrowland, it opens up the idea of an oracle. So we actually had a product where we lent against pre-IPO shares, mostly SaaS companies with strong revenues, billion-dollar plus market caps. And there were two issues, I think, from a client perspective I found in that. One, that as a recourse option, we had to take a small portion of equity, typically like 10% of what's pledged as a fee.
Yeah.
Just as a hedge, right? And then the other thing was, one, it takes time to close, but you don't really have an ongoing look into the financials of the company, and you don't really have something like an oracle.
Yeah.
If you can combine the tokenized issuance with an oracle, which could be in some ways protected from public eyes, but you as the asset issuer could view it, and you could use that in your lending mechanism, like in the underwriting.
Yeah.
That opens up a very fairly priced market for lending.
That's coming, by the way. That is underway.
I think that's a huge unlock. As long as we can get the oracle, people like us are set up to lend against tokenized RWAs. We actually have our systems fully built for that.
Yeah.
And it's something that will not only unlock the lending, but then we'll get the capital flowing in, because the capital now is sure that we're lending against something at the fair price. We have liquidation mechanisms of some sort, which has yet to be figured out.
Yeah.
But I think that creates a whole lending market around this.
There will be a significant lending market this year, for sure, against private shares. That is on the way.
And so we touched on, like, you know, the tokenized stocks, maybe those are folks that are international or can't access the US markets as easily. What is there a difference in demographic for the tokenized, like, private company equity? Are you seeing like, we were all saying like maybe that's the best way for retail to get access. Are you seeing demand for retail there, or is it a bunch of like family offices that maybe didn't get into the primary deals, or high net worth individuals in general? Curious what the breakdown is that you all are seeing.
I mean, you got Open Deal Portal, right, which is the Reg CF platform, right, which is retail based, right? That's fairly new. Jobs Act still evolving now. You take it at a tokenization piece and the secondary market liquidity piece that they can also have in the year, right? In that particular case, you still have the Reg D, Reg S, Reg A plus, right? And you have obviously the public markets as well. So I think the demographics for that is just to make it available to people who didn't have access to it, period, right? Specifically the private stuff, right? The public stuff in the US, people open up their E-Trade, their Fidelity. That's never been the problem. I don't think you're, increasing or making something that's inefficient more efficient by tokenizing that. I think where you're creating crazy efficiency is in the private markets, and tokenizing that and settling that on the secondary market, in a couple of minutes, as opposed to the other way around, and opens up a lot of avenues to the employees, to the founders, to retail people who weren't able, whether it's through Reg CF or even the offshore investors who don't have access to a lot of these U.S. companies now can go open an account on Republic and buy a U.S. company that's private, right, through a Reg S. So the opportunities are endless. And I think that's the demographics are that.
Yeah, and I mean, even if you just cut out the madness of multi-layered SPVs that go on in all these hot companies, that's a win in and of itself, just given the opaqueness, the layers of fees, and then like the inevitable fraud that goes on there.
And the big decision for the issuers and for the company and for the owners, right? If they want this to be successful, you kind of somewhat have to make yourself look and feel like a public company. You need to give some disclosures, not just from protecting yourself from a legal point of view. Like we provide and help companies do that, but also to let them in as much as you can, right? You're private for a reason, but you still need to, give them some kind of financials, some kind of information on what your business plan is, what your perspectives are, who are your future customers, targets, et cetera, and and the growth expansion opportunities that you have in that particular industry, and that's the key. And we have a way to make all of that available before they click the buy button, right? It's up to the issuer and a lot of times I think that will drive the success or failure of the liquidity in that particular business or that issuer in that case.
And then, so there's a few different asset classes that we've already touched, going from like your stable coins in the beginning, your money markets, the credit funds, now private company stock, public company stock. Another one that like always has got thrown around as buzzword is just like real estate. Mm-hmm. Curious, like your guys' thoughts there, like why hasn't it succeeded to date? But yeah.
I'll tell you, one of the first issuers that came to us when we did our first secondary market trade was real estate, and they wanted to tokenize, apartments, like actual rooms, like Airbnb, like give you opportunities to participate in the rent profits. In theory, makes a lot of sense. In reality, I think, speaking to the demographics of the people that buy real estate, they're just never, whether it's because of lack of education or comfort level, it's never really taken off for anything. Although I think real estate, in terms of tokenization and doing pieces of real estate in the building, apartments, whatever the case, you can get very creative with it. In terms of tokenization, never really took off. So. And I think it's probably, in my opinion, the demographics of the people that would buy that, they're just not interested in tokenization for whatever reason. So that's my thought. I don't know.
I mean, we have recently launched a tokenized real estate platform called Profit R that we are pretty excited about, mainly because one of the key features of it is it gives second to second interest dividends, which is like just streaming basically rates back to you, which I think is actually really interesting. If you gamify that appropriately, you can create a really kind of good endorphin mechanism that you feed to people. But Vlad is right. I think one of the problems really out of the gate was that the group of individuals that are really interested in tokenization, like real estate is like one of the most boring assets for them. Boring. And so it just gonna take time for that to kind of catch up and overlap. We're looking at like tokenizing casinos right now, which I think is super interesting. And I think that is an asset that retail and individuals and accredited actually would want, because you can build a lot of actual gamification in there.
It's different kind of real estate.
And it's engaging. Yeah. And so actually we very much like that. But just to reiterate what Vlad said, I mean, when this emerging tech was coming out, and your first movers are generally not your people looking at like, mortgage rates for the most part. Right. And you really try to have to find
real
a happy
estate, medium.
The
expected return on the real estate deal, right? Like 7 to 10%. People are ecstatic, right? People in crypto, they're like, what? They're like, that was another piece of it. It's still, again, that goes to like the earlier point that I was talking about. It's still, you're owning equity in the company or whatever, whether it's tokenized or not. You want good quality companies, right? But real estate, that's the returns in real estate, and it's not sexy, right? So I think that's part of, now casino or something different. That's a whole different situation.
Now, the reason institutions will get very interested in it is because now you can buy fractionalized or tokenized real estate, and if there's a borrowing mechanism against it, I mean, that's like the classic retail play, right? You go buy a building, you lever it up, you take the cash out of it, you go buy another building, you lever it up, and it's a much more efficient mechanism to do that. But that's only recently starting to show up, and so those players will, kind of get around the table now.
I think the one issue with real estate also is that the ledger is not on chain, right? And that's probably not going to happen for a long time. And as a result, it's still going to take time to close on a place, to as a lender to liquidate on a place or like foreclose per se. That's not an instant mechanism.
No, it's all traditional
liens,
rails.
UCC, all of that stuff. It's all that's all.
I think the UCC filings are still like a solved problem. We do UCC filings for our loans as well. But just like the foreclosure and liquidation aspect, from a lender perspective, is also not very interesting. Just on a traditional real estate asset.
Yeah, and I am bullish on it in the future. It's basically the way to look at it. And the other thing to keep in mind, like the RWA environment, like the RWA buyers are not crypto buyers. Like those are not the same, marketing demographics at all. Right. And I think a lot of people, when they get into the RWA space, they're like, oh, we're going to unlock this whole, crypto access point. It's just not, there may be some overlap, but it's, ultimately they're very, very different user groups.
I do believe like at some point in the future, I don't have a timeline for it. Maybe it's 15, 20 years, maybe it's more. Every asset is going to be from the bottom up tokenized, just as the most efficient rails for issuing any asset. When that happens, I think what's very exciting from a customer perspective is being able to borrow against your whole asset class or your whole asset base. Today, you have many disparate forms of credit.
Yeah.
But when you get to like the 20 million plus range, you go to a private bank, you're like, okay, this is my asset base. Let me borrow against all my assets together as a line of credit. That's what inspired us to start this company. And that now gets to every customer in the world, not just to like the very top of the top who can access a UBS or a JP Morgan private.
Yeah. Well, my future state is that everyone will have an account where all your assets live. Mm-hmm. And then when you go and buy something at the grocery store, there'll be an AI agent that will just sell the most efficient asset of whatever it is at that time in order for you to pay for whatever that thing is.
Or borrow against.
And so that will just be all automated and everything will just sit within whatever that one account structure is.
You're kind of previewing a product we're going to launch.
Oh, let's do it. I haven't even heard that.
Yeah.
Shameless plug.
Because like right now it's so hard, right? Like if you're a lender and a client comes to you and says, oh, I have equity in SpaceX. Like most lenders are not tech forward. They don't have like an integration with Carta. Now you have to like go look at their manual like registry. Do you know if it's real or not? All of these other things. The same goes with so many other asset classes that once you have these digital representations of it, it becomes much easier for you to at least verify and say, okay, I know you have like ownership of this. I can get a sense of the price around it and things of that sort.
Yeah.
But curious, so like you talked about casinos. Like what's like the most out of left field thing that maybe you all have looked at tokenizing or are even considering? And on the casino side, is it like an equity play or is this like tokens, a profit share of like how much the house makes? Curious, like what exactly you're tokenizing there?
Yeah, I mean, without ripping through too many NDAs, I mean, on the casino side is mostly equity oriented with there's economic stuff type of built into it. What's the wildest thing someone's tried to tokenize with us? It's always funny in the different like market cycles, like what shows up, like, I don't know, we saw like the world's second largest emerald or something, all this kind of like weird types of things. It's like, what do we do with this largest comic book collection, all those types of things.
Yeah.
So we've seen, we could wallpaper our office with these types of like really kind of funky stuff that, you can't really sell. And how would you ever exit this thing? Yeah. So, but we love seeing it. I mean, I the more that we see, frankly, the better. It just means there's more people looking at this, more people trying to get creative. Inevitably, someone will build products and unique services around all those things. And so, I mean, I always tell everyone, I'll look at anything, send anything our way. Obviously, we have particular mandates, but it's exciting. Yeah.
Yeah, no, that's awesome. And what do you guys personally think is the time frame between when we start to see more companies do like these private issuances, like their private stock on chain, and it becomes more of like not just like hey, you're an outlier company doing this, but it's more of a normal thing to do? Are we a couple years out?
No, between 120 days and somewhere around 6 months maybe.
Okay,
it's this year.
Yeah,
it's 100% this year.
If that happens, do you think more companies will just have no incentive to go public? Because today, the only reason to go public is it's actually a worse outcome for most companies. Because once you're public, you're holding to your quarterly reports. If you have a large amount of your stock public, it's a very different mechanism than like retaining control. And the only reason you really do it is to get that IPO cash bump that you get. Yeah. But if you can sell it in tranches while retaining control, and you can still maintain the private nature and stay more in control of what you actually are doing, does that change the whole calculus of even needing to go public?
There's three reasons you go. In my opinion, there's three reasons you go public. One is access to capital markets. That's a real thing. Two is to be able to print your own money. Mm-hmm. And three is to be able to create liquidity for your investors, and retention mechanisms for your employees. Mm-hmm. I am very confident that Republic can solve two of those three. The one that there isn't yet a solution for that's very obvious to me yet, but I'm no doubt someone will figure out is the capital market access component, which will require a little bit more brain damage. But no, to answer your question, I think it will become less and less advantageous. It already is less advantageous, right?
Yeah.
Why is there 4,000 companies on NASDAQ versus 8,000? It's less advantageous. It's expensive. It's difficult. It's painful to be public. That's already the reality, right? So if now we're able to create mechanisms where we can solve 2 out of 3 or maybe 3 out of 3 of those issues, that becomes very compelling for people to not end up being public companies.
I'll give you an early proof point for the third one that you mentioned,
I'm
capital
ready. Hit
markets
me with
access, right? So we've seen a whole new trend of Bitcoin treasuries. So initially there was like the DATs, but we also have a lot of opcos that are just forming Bitcoin treasuries and using that as a stable capital base, right? Or as a growing capital base.
Yeah. So
initially, everyone did ATMs or issued new equity to access credit, right? And that's it's traditionally the cheapest way to get access to capital markets in public equities. You pay a dividend, that's how you pay it off, whatever. That's like 4 or 5%, whatever is your dividend. But this Bitcoin itself is collateralizable, and the rates historically were not where they needed to be. Today, the rates are maybe a point or two above the public capital markets. So we're seeing in our business, we're seeing a lot of companies, especially these like public DATs and opcos that have Bitcoin treasuries, increasingly explore the Bitcoin backside over issuing dilutive shares and having to pay a dividend on them, or doing an ATM. Which is, I guess, a similar mechanism. And we're seeing that shift happen right now. I'm not saying that every company in the world is going to become a Bitcoin treasury or have some crypto treasury underlying.
But we would love that.
We would absolutely love that. Absolutely. But as we see, as these tokenized stocks themselves become collateralizable, that creates that mechanism. And as we see more capital markets come on chain and more liquidity enter the space, I mean, we've seen a huge increase in private credit in the last few years. Where that shakes out, we'll see now. There's obviously a lot of dead bodies coming out lately. But we'll see where that shakes out. I think it's still like an early stage in a much larger transition. So I do see capital markets in this space becoming, at least from a rates perspective, similar to like to capital markets in the public sector. Obviously, the size is nowhere near where it needs to be, but I do think as rates converge, the size will increase on this side.
I'm hopeful. Yeah, we'd like to listen. That's the last piece of the puzzle, I think, and whether that's you guys or people that can bring forth those solutions for us. I mean, that's again, I don't know why you end up being a public company if you can solve those 3 things.
Awesome. Well, I know we're running up on time. Andrew and Vlad, thanks for joining us. We could riff on RWA all day, so we'll have to save the rest of the conversation for another time. But before we leave, any exciting announcements or previews from the Republic side that you think would be helpful sharing? Or
I would just say stay tuned over the next 30 to 60 days, very relative to what we've been discussing today. Probably the largest announcement that we've ever done at Republic. On the way.
Yeah, so we're excited to check it out then.
This is the most excited I've been in the space since the start. So
awesome.
Yeah.
Well, we'll stay tuned.
Thank you, guys.
Thank you, guys.